What's up? What's up? We are going to take a look at some crypto stuff today, right? The market's down. We're going to look at some news. We're going to look at some charts. I'm going to do this short video. We'll be going live at noon Pacific Standard Time. We go live Monday through Friday, noon Pacific Standard Time, most days, depending. I'm a one-man show, basically, so I can't always do every day, but we usually go live on TikTok and YouTube. We're going to look at some stuff here. I'm going to give you my thoughts. There's an important piece of legislature coming up that we're going to want to review. Hit that like button. Definitely hit the follow button, subscribe, and check the link in the description for the my must-have crypto resources. So here we are looking at the Bitcoin chart. I want to really direct your attention to this blue line right here. This blue line right here is the last trend line, right? Okay, so what I mean is this is kind of, to me, this spot right here, because this trend line right here, this is the last trend line, and it's hitting the bottom of this Fibonacci golden pocket. So what I see here, to me, Bitcoin's hanging on by a thread. Now listen, daily crypto bull has turned into daily crypto bear, right? Not long term, not like it's going to zero. I just mean we're in a bear market, in my opinion, and I'm excited about it because the lower this goes, the more money I make when it goes back up. Okay, and I think we could be going down for at least 6+ more months, but we'll see. Here's what it has to do with. Here are the biggest things to pay attention to. The Fed and the economy. The Fed and the economy. The dollar and the economy. So the Fed is raising interest rates. Why does the Fed raise interest rates to fix the economy? Because here's what's happened. The value of the dollar, the buying power of the dollar has gone down. That's what inflation is. So you have to spend more money to buy the same things. It means the buying power has lowered. As they raise interest rates, the ability to borrow money becomes more expensive. Because if you didn't know, hear me on this. This is very important to know. When you go get, say, a mortgage from a bank, do you know where that money comes from? You may be thinking that it comes from, well, other people deposited money in the bank and they just reuse that money and give it in a loan. Yes, a portion of it, typically a small portion. Where most of the money comes from is it's literally brand new money printed out of thin air. Wait a minute, you tell me the bank prints money? No, the bank doesn't print money, but the bank has access to the group that does print money, which is the Federal Reserve. So the bank, when you want a mortgage, the bank goes to the Federal Reserve and says, hey, we got this mortgage, give us money. So the bank takes a loan from the Federal Reserve. And they get it at a certain interest rate, which has been basically zero for quite a while. And then they give it back to you at a higher interest rate, and they keep the difference between what their interest rate with the Fed is and what the interest rate they give you. Okay, so literally money gets printed out of thin air. But now, as the Fed raises interest rates, that means the banks have to borrow money at a higher rate, and therefore, when they give you a loan, you have to pay a higher rate. So what that does is that curbs demand, meaning less new money is coming out. It's limiting supply. And in addition to that, the Fed is buying back bonds, buying back mortgages, buying back securities. Why? Because selling. They're selling bonds, they're selling securities. Because as they sell, they suck money back in, out of the economy into the Federal Reserve. So what the Fed's doing, their two biggest tools are limiting the amount of new supply that comes out, and they, like a vacuum, suck money out of the economy, right? So that creates less supply of the dollar and lowers demand of new money, and therefore lowers demand of buying other things like houses, assets, cars, stocks, speculative things, stuff like that. Really hear me on that. This is just so important to hear. Now, couple that with oil being really high, and there being a big supply chain issue. You put all that together, and it just screams bear market to me. Now, the biggest question, stick with me on this. This is a really valuable thing I'm sharing with you. The biggest thing to pay attention to is the Fed plans to keep raising interest rates. It plans to raise the interest another 0.5% in June and another 0.5% in July. That's what Powell said this week. Now, they just raised it 0.5%, 50 basis points. That's what they mean, 0.5%. Now, that happened, and Powell said they're going to do 2 more. Now we'll see what happens. I want to be very clear with this. The 50% interest rate is the highest raise in the interest rate we have seen in 20 years. There has not been a 50% interest rate increase in 20 years. And we're about to take on 2 more after this. Think about that. Now, the biggest question that comes with that is, will the economy crumble? That's why they talk about a soft landing. We'll see. Some people say there's no way a soft landing can happen. It's going to be rough, and there's people in between. I don't know. But I do believe that we will see at least 1 more 50% interest rate hike, and I think we will probably see 2 more, and we will see what the economy does after that, right? The Fed limiting new money coming out, sucking money out of the economy, so we will see what happens. We have the supply chain thing and the oil thing. Let's get to the Bitcoin chart. Remember that stuff. Hit the like, hit the subscribe. To me, this is the Bitcoin hanging on by a thread. To me, this is the last spot. We have this trend line holding support, and we have this golden pocket holding support. If Bitcoin goes below this, which is about 35,300, if it goes below that and stays below that for several days, hell, even if it just goes below it, but especially if it stays below it a few days, we are in, this is the next line right here at 32.8, right? Because that lines up with this. Plus we have this Fibonacci line, 32.8 is the next support zone. So if we drop below this 35.3, I very much see us going down to 32.8. And if we drop below that, the next line would be probably about here at, we'll say 30,000, but a little under 30,000. Then 29, and then we could just go a heck of a lot lower. Don't get concerned. Don't get scared, in my opinion. I'm getting more and more excited. My biggest fear is that this stuff won't go down more. So the biggest things that I'm doing right now is I've sold a lot of my altcoins, and I'm just in Bitcoin and Ethereum, and I'm using my cash and turn them into stable coins, which are crypto coins that are always worth $1. They're always worth $1, and I'm putting them in DeFi, getting up to 30+% interest on them. If you want to learn how I'm doing that, check the link in the description. Click that link, and it'll take you to this page. Get my DeFi guide. These are my 5 favorite DeFi protocols, where basically all my DeFi money is. And 2 of these protocols, I'm earning over 30% interest on my stable coins, which are always worth $1. Okay, so check that out. And plus, I'm getting hundreds of percent on other cryptos, but I don't have many of those left. I'm mostly in stables, Bitcoin, and Ethereum now. Now let's go to this. Well, before that, let's zoom in. Let's zoom in on Bitcoin a little bit more, because we're on the daily chart. Let's go to the, say, 4-hour chart, which I'm looking to take along. I think we're going to move into a bit of a green wave. What do you mean by green wave? Green wave, red wave, green, red, green, red, green, red, green, red. Price moves in waves. So I think this is a strong support zone. I think we're going to see a bit of a bounce, but I don't know if we'll go much above 38,000, frankly. But a lot of money can be made in that little move. In reality, a person could turn 1 Bitcoin into 2. That's right, with just this little 10% move here. If you want to learn how to do that, take my free masterclass here. But very interesting, very, very interesting. So to me, let's pull up Lever Atlas real quick, my momentum indicator. It looks to me, because when we do this type of thing, let me move my face. When we do this type of thing, when you see price going down like this, right, and you see momentum going up, let me click that again, and you see momentum going up, right? So you see this price going down, momentum moving up, and we're hitting this trend line and this Fibonacci golden pocket, typically with a strong support zone. Typically we're going to see a bounce, right? Momentum's telling us we're getting a bit of a pivot point here, plus we're hitting strong support. I think we're going to see a bit of a bounce, probably no higher than 38,000 though, in my opinion. But I'm on the 4-hour chart, and any trades I take, I will do on the 4-hour chart most likely. So let's go to this piece of news here. I found this very, very interesting. New York is close to a Bitcoin mining crackdown. And actually, that's almost light, because actually they're pretty much kind of banning it. is what they're really discussing, and it's in legislature right now. Here's what it means for the industry. I'll boil it down for you. So basically, they're looking to kind of ban Bitcoin mining and any crypto mining unless it is 100% renewable energy. I still stand that I think the people of New York State should sue their Congress. They should sue the state. That is what I think. I think there should be a class action lawsuit from the people of New York versus New York State. That's what I think. I really think that. Why? This guy's crazy. What's he talking about? What I mean is New York is doing a tremendous disservice to their people to appease a few people, their cronies, and it's just so blatantly obvious that I think they should get sued and they would lose. They would lose. Just my opinion. So here's another example of it, right? Well, the first example I want to give is that New York State is banning, it doesn't allow the people that live there to use, say, Voyager, which gives 9% interest on its stablecoin, USDC coin. It's a stablecoin always worth $1. Voyager gives 9% interest on its stablecoin, on USDC. Its stablecoin always worth $1. So it allows people to get 9% interest on their cash. And it's not, and New York said, no, you can't do that here. No one's getting hurt. Voyager's a publicly traded company. You know everybody there. They're completely as legit as it completely comes. But your people, you're not going to let your people get 9%. You're going to not let your people take care of themselves, especially in these uncertain times, just to appease your Wall Street cronies and the banks and the financial sector because they can't come even close to competing with that. That is why they should get sued, because it is obvious. It is obvious violation of fiduciary duty. Obvious. If you want to check out Voyager, again, my resources page here, link in description, scroll down a bit. It's right here. I'm getting 9% interest on my USDC coin, on my cash. And I get interest on my other crypto, Ethereum and Bitcoin, etc. So on the first of every month, I get free Bitcoin, free Ethereum, free USDC coin, free Cardano, free Polkadot, just dropped in my account for my interest payments. And it's not locked up or staked. Use this code 2 and you'll get $25 in free Bitcoin when you deposit or trade $100 in crypto. Not sponsored, just giving you the details. So what they're doing here is they're going to companies and people that are already mining Bitcoin and other proof of work cryptos. We'll just say Bitcoin because that's by far the biggest one. Even though they've been doing it for a while, when it comes to renewing their license, etc., if they can't prove that they are 100% renewable, they're not allowed to renew. And you can't start mining there unless you are 100% renewable energy. That's the discussion that's going on here, and it's pretty heavily pushed. In other words, they're just trying to say, what reason can we come up with to stop this here? Because it's affecting our buddies too much. That's what I think. I would really check this out. It's on CNBC.com. Oh, I don't like CNBC. I'm a Fox guy. Stop it. Stop it. Just take the information wherever it is, okay? Don't be a robot. I would really recommend reading this. Other than that, there's not a whole lot going on. We could talk about stagflation. Okay, we're going to hear this word a lot if you haven't been hearing it a lot already, which is basically when there's inflation going on, the decrease in value of the dollar, the decrease in the buying power, and a decrease, which is inflation, and then a decrease in economic activity, gross domestic product. It's also usually coupled with high unemployment, but we're not at high unemployment. What's interesting, Powell said yesterday, we actually have very low unemployment. And what's funny is there's actually more job availability than there are unemployed people, from what I took from what Powell said. So that is interesting. But I've also been seeing that Amazon may be doing some layoffs soon because the massive hiring they did during the pandemic, the demand has slowed because obviously the demand was insane during that time. It can't keep up because people can now go do other things other than sit at home and order things off Amazon. So they're going to be laying some people off. That doesn't make everything, but that just shows if they're going to do that, what else is going to go on. So I think unemployment could definitely go higher and that job demand could go lower, but we'll have to see what happens, right? Because if the economy does start to crumble, the Fed will have to stop with their interest rate hikes and or even turn the money printer back on and lower interest rates. So we'll see. I think I don't think they will do that. I think that they are going to really make the economy and people endure much more pain than most people think, because they have to. Because the alternative is everything really, really does burn up if they don't take this way overdue path to correct things. But in terms of crypto, I think it's good accumulation levels. This is because when I DCA, daily cost average, I only do it when the price is 40% or more below all-time highs. We're at that. So I've been buying a little Bitcoin, buying a little Ethereum, but I sold all my alts, basically, and I turned them all into stable coins where I'm getting 30+% interest because I think everything's going down lower. So I'm building my cash position. Everything the Fed is doing is to raise the value of cash. So this is a period to me that getting as much cash as you can and growing your cash position is stocking up for the attack when this stuff really does hit bottom, which I think is going to happen in the next 6 to 12 months. That's my opinion. We're going to be going, it's 11:22 in the morning Pacific Standard Time right now. Going to be going live at noon Pacific Standard Time, so 38 minutes from right now. We go noon basically every Monday through Friday at noon Pacific Standard Time here on YouTube and on TikTok. I'm Daily Crypto Bull across all the socials. Not real Daily Crypto Bull, Daily Crypto Bull _1. No, Daily Crypto Bull across all the socials. And the link in the description takes you to my crypto resources page. Has all the stuff, right? There's my TikTok, there's my Insta, Twitter, YouTube. Take this masterclass. I think this is it's always a fantastic time to get free Bitcoin and Ethereum. Imagine getting a bunch of free Bitcoin and Ethereum because the price is going down. Take this class. Took me months to make this damn thing. Took me years to acquire the knowledge to even be able to make the class. You get it for free. I'm going to start charging for it soon. And this is the thing that really helps me do it. This DeFi guide here, $20. If you don't like it, email me, I'll refund you, okay? But here you can see where I'm getting 30% plus interest on my stable coins. Stablecoin, always worth $1. I'm getting 30% interest on my cash, right? And these aren't just some fly-by-night shithole DeFi protocol. This is where all my DeFi money is. These are as legit as they come, in my opinion, and in my experience, and I've used hundreds of DeFi protocols. I've been around a while. Other than that, and if nothing else, use this link. You can get 9% interest on your stablecoin. This is as easy as Coinbase. You just download. It's in the App Store. You download it and you deposit your money. You can transfer your money straight from your bank. It's a publicly traded company. Everybody is well known as completely legit as they come company. Traditionally, every single way. Be sure to use this code and get yourself some free Bitcoin too. Hit the like, hit the sub. You're awesome. See you if you're going to go on the live stream. See you in about half an hour. If not, see you in the next video. Take care.